Hello, let's take a look at my bearish and bullish scenarios for Bitcoin, starting with the daily time frame. So here we are counting this as a wave 1, 2, 1, 2, 3, 4, 5, green wave 5 to red wave 3, red wave 4, and red wave 5, looking for lower prices. So what are the probabilities that this is a wave 4? It is good that we haven't reached the wave 4 invalidation line. As you can see, I have written here. But if we take a look here with a channel and you pull that from the origin of wave 1 to wave 2, like this, the green wave, because it is the green wave 4 we are exploring now, you can see that green wave 4 moved well beyond this channel, meaning that this has a lower probability of being a wave 4. And if this is not a wave 4, then this is also something else. So then we need to resort to something else, and that is this, which has the highest probability right now. So 1, 2, 3, 4, 5, wave A, W, X, Y into wave B, and then a 5-wave move into wave C. So a zigzag like that. And after a zigzag, you are looking for either a continuation of the trend, like a 1, 2, 3, 4, 5, an impulse. But if this is an impulse or not, we're going to get to on the lower time frames in a bit. But if we just focus on the big picture, so A, B, C, a zigzag, what is this? What is the possibilities of this structure? This could be like an A, and then we have a B, and then we move up into wave C to wave X. So we have expanded flat like this. It could also be a triangle, but a triangle in X is a lower probability. And it could also be a zigzag. So if we have a zigzag, this needs to be an impulse like this, and then we need to have correction, not taking out this low, and then we need to move up in a 5-way structure as well. So that are the possibilities for this structure. And after this, because this is a WX, it's a corrective structure. We are looking for lower prices unless we get a triangle in wave Y. Because if we get a triangle in wave Y, it will look something like this. So W, flat, like this, and then A, B, C, D, E, like a triangle like that, and then we move up. So that is basically the only scenario where we don't really take out this low. But this has a higher probability of being corrective, and therefore it has a higher probability of taking out this low, because a triangle is the least common structure, but it's still a possibility, which is very important to be aware of. So if we take a look at the lower time frames, if we start with the bullish scenarios, here we are counting this as a finished WXY or an ABC like that, a zigzag as we just mentioned. And I mentioned this is in my previous video that 1, 2, 3, 4, 5, a leading diagonal in itself is a low probability structure. This is not really counting well as an ABC. You could force it, but it's all about probabilities and you don't really want to force anything. But for this sake of having a bullish scenario with a leading diagonal, you force it here, but it has a lower probability because of that. After that, you are looking for basically a W, X, Y into wave X, Y, B, an impulse down into wave C, and you don't want to touch this lower probability wave 2 at 82,128, because that lowers the probability of this being a wave 2, meaning that this whole scenario has a very even lower probability than it already has, and this is the invalidation taking out the low. And if we move on to the 1, 2, 1, 2 scenario for the bulls, so 1, 2, 1, A, B, C, W, X, and then a Y into wave 2, and then we move up. This has also a very low probability because of the time here in wave 2. So this is well over, you can see well over 6 fib time. It's like 10 or 11 fib time, something like that, which is very uncommon. You could argue that if we were to count this as a 1, 2, 3, 4, and then we need to have an ending diagonal here in wave X, that this is a wave 1, but then you also have a big wave 2 as well, and this doesn't really count well as an impulse. So it is, as I usually say, pick your poison kind of thing. So this whole structure doesn't have the highest probability because of the proportions. And also we hit this lower probability for a wave 2. We hit that here. So therefore this has a lower probability of being this wave 2, and if that is the lower probability, then this has a lower probability of being the start of this structure. So then we move on to the bearish scenarios. Nothing has really changed from my last video. Everything has just been stretched out basically. So here WXY into a finished wave 4, but as I mentioned, wave 4 has a lower probability. So therefore, because of the base channel being breached, so therefore this scenario with a wave 1 and then WXY into wave 2, looking for 3, 4, 5 and so on, has a lower probability automatically because of, yeah, this not being a wave 4. Simple as that. So if we move on to the triangle, W, A, B, C, D, and then we are looking for a wave E. This is a possibility, absolutely. The only issue here is that we moved quite past this trend line on the triangle, which you don't really want to do. It is not a rule or anything that you can't do it, but you want to have it tend to stick within it, and if we are breaching this, you just want it to like wick above and then move in very quickly. So yeah, I wouldn't say that this has the highest probability, but it isn't invalidated or anything like that. And you got to take into account being Christmas and everything, the holidays and everything gets stretched out in time. So yeah, take this into consideration of being a possibility, and the invalidations are taking out this, the wave A and wave B for this. But after a triangle, you always look for an explosive move. So W and then wave X when the triangle is finished, you look for like a very explosive move. If you get a impulse or not, yeah, then it's for the future. But you could have like expanded flat like this, as I mentioned, but the move, this is the most important thing, is that move finishing a wave E in a triangle, you need to have an explosive move. If you don't have that, then the probabilities of it being a triangle decrease even more. And then you have something like this, a messy kind of WXY stretched structure like ABCW, ABCW, WXY to X, ABC to Y to X, and then you have your wave Y. So, yeah, what are the probabilities? The probabilities are not the highest of this being a wave 4. Therefore, the probabilities are higher that we are looking at something like this. But we don't need to reach this wave X, because we could have, as I mentioned, like an A, B, C here, and not really, we just take out this high and then we move down, or the triangle scenario and everything like that. So it's very messy, very stretched in time. So just wait for the market to show you the direction with a clear impulse. We're looking now for a 5-way move. Either if we have it up 1 2 3 4 5 and then a correction, we know that okay, so this is a higher probability of being a zigzag or an impulse, something like that. But the main thing to take with you is that this has a low probability of being a wave 4, and if it has a low probability of wave 4, then we are looking for a corrective structure like this. And after a corrective structure, you always take out the high sooner or later. So yeah, I hope you enjoyed the video and I hope it was helpful even if it is quite messy right now. And I also hope you had a great day.